Welcome back. Joining us virtually this afternoon, we have our financial expert, Nick Sapienza. Nick, good afternoon. How are you doing today?
Hey, Taylor, doing great. Glad to be back.
Glad to have you. So we spoke about bonds the last time we met, and so I guess the question for today is, should investors make changes to their portfolios?
Yeah, this is a constant question, right? It's whether or not it's bonds or something else. Like, we're finding problems at all times, or something to think about. Just to get straight to the point, the answer is most likely no. Keep durations low, keep your credit quality high. For inflation, you can use tips, you can just add more to stocks, things like that should be dictated again by your actual plan, so you know what applies to you. But most importantly, I think is in this type of market, just to keep things simple. Be aware of any advice to reach for yield or use complex products. If you're getting pitched anything that's paying like 3.5%, 4%, now's a good time to be skeptical. This can end badly, and we've seen it happen before. So if you're unsure, if you're kind of confused, then you should definitely get a second opinion. Second, don't be reactionary. It's easier said than done, I know, but it's important to build that decision-making framework around your investment strategy before these emotions arise. And should we do this or should we do that, right? You don't have to second guess your portfolio at all times. Investing can seem counterintuitive at times, but more money has been lost trying to avoid whatever scenario you could think of, rather than maybe just sitting through them. There's always a story, there's always a narrative, but not as often do they actually come true. Last, and I think most importantly, and I'll end my rant after this, sometimes the hardest part about bull markets is actually enjoying them, is getting concerned about something in the portfolio or reaching out for something that's like promising outperformance. You're seeing a lot of people become rich overnight by buying things like Dogecoin. It was literally created as a joke. The creator of Dogecoin thinks that this is comical, and people are buying it in hopes that a greater fool will come along at some point in the future and buy it from them. So don't get caught up in this game. This is like the perfect environment for a Ponzi scheme, as it's been said several times. So I think that to leave you with this and to end my rant, look at this as a law of nature. If you play stupid games, you'll likely win stupid prizes. And that's it. That's all I've got.
Rant over. And so we have about 30 seconds, Nick. So if people want to reach out to you for some financial advice, how can they contact you?
Email is great. Phone number is great. Googling us is great. I think social media is probably the best way to connect. Nick Sapienza, LinkedIn, Facebook, Instagram, whatever. Social media is probably the best way for us to connect, besides email.
All right, Nick, thank you so much for dropping some knowledge on us today. We always appreciate it and have a great time catching up. Thank you.
Thank you.
If you guys want to rewatch this, it's going to be on our website, klaf.com. Before we go to break, let's check in with Adam Olivier.